Hello everyone, welcome back to the channel. Today I want to talk about Lyft and Uber as they just reported earnings days ago, and you guys know that I invest in Lyft. I have been investing in Lyft for about 2 years already. So I want to talk about Lyft and Uber, compare both stocks, talk about why I invest in Lyft and not in Uber, and which one might be a best investment right now. If you're new to my channel, welcome. Please consider subscribing and smashing that like button since it really helps the channel out. First of all, we can see that Lyft today is down 5.24% to $39 per share. It currently has a market cap of $13.69 billion, and they just reported earnings per share of 9 cents in comparison to 8 cents expected by analysts, and a revenue of $970 million in comparison to $940 million expected by analysts, and active riders not beating analysts' expectations of 18.73 million when analysts were expecting 20.2 million. Last but not least, the revenue per active rider of 51.79 versus 46.54 expected. So actually, very nice numbers on their earnings per share, on their revenue, and their revenue per active rider. The only thing is that the company did not provide exact guidance on active rider projections, aside from saying it expects rides to decline slightly quarter over quarter. Analysts expect the company to report 21.7 million active riders in the first quarter of 2022, which would be an increase or a growth from quarter 4 2021, but we already know that they're already telling us that they are not expecting a quarter over quarter growth. So that might be one of the reasons why the stock dropped after earnings and why it's dropping today as well. Now we can see here that Lyft reported a revenue of $3.2 billion in comparison to $2.3 billion year over year. So that is about a 70% growth, but we do have to take into consideration that they are almost at pre-pandemic levels of $3.6 billion. Something very interesting here is that we can see that even though in 2019 they made a lot of money, they had total cost and expenses of $6.3 billion. Well, this last year they had a total cost of and expenses of $4.2 billion. So even though their revenue grew from $2.3 billion to $3.2 billion, a 70% growth, we can see that the total cost and expenses did not grow that much, from 4.1 to 4.3 billion year over year, which is obviously very good sign. As you guys know that I like to see how their revenue has a nice growth while their expenses not that much, in order to have a net income higher and higher every year. Even though they report a net loss of $1 billion, still has been in a decrease in 2019. As you can see, $2.6 billion in 2019, $1.7 billion in 2020, and $1 billion in 2021. So this is actually good news in my opinion. This is one of the reasons of why I invest in Lyft. Something very nice to see here is that the revenue per active rider have been increasing year over year, as we can see from quarter 4 2020 to quarter 4 2021. It decreased a little bit from quarter 1 to quarter 2, and then it increased a little bit from quarter 2 to quarter 3, and then it exploded from quarter 3 to quarter 4. As well as their active rider, they have been increasing quarter over quarter, slowly but surely, but not in the last quarter, as it dropped from 18.9 to 18.7 million active riders. But that is something that Uber had also, as they also saw a decrease in riders, as we might think that we still have a little bit of problem with because of Omicron and all the other Delta and all of the other variants that we had in quarter 4, and all of these restrictions that were still on the country. Now on the other side, we can see that Uber is currently trading at $35.27 per share. It's down 6.58% as well today, with a market cap of $67.9 billion. It's obviously way bigger than Lyft, as we know that Uber is already in over 80 countries around the world, and they have Uber Eats, Uber Rides, and all of these other businesses, while Lyft is only in the United States and Canada. Now, Uber reported earnings at 44 cents per share and revenue of $5.78 billion in comparison to $5.34 billion expected by analysts. And their mobility business, which is basically their Uber Rides, they reported a 67% growth. And their delivery business, they reported a 34% growth. This is their gross booking, which is the whole amount of money that they receive, but not the whole amount of money that they get to keep. And I'm gonna explain you that later. They did mention here that the company beat estimates on adjusted earnings per share and revenue, but said it had fewer active riders than in the prior quarter, just like Lyft. So it's definitely something that we have to take into consideration, because when I saw Lyft earnings and I saw that they had a decrease in active riders, I waited to see if Uber had the same problem, because if Uber saw an increase in active riders but Lyft a decrease in active riders, then that is something to worry. But it was not like that. Both companies saw a decrease in active riders, so it means that both companies, or the industry itself, has been getting affected because of the Omicron and all of these economic hardships at the moment. Now, Uber reported a revenue growth, but here we can see their revenue. They posted a revenue of $5.7 billion in the past quarter and $17.4 billion in the past year. But remember that what we were saying about their costs and expenses on Lyft. Uber is a little bit different. We can see that they grew a lot, 83% year over year on the revenue, from 3.1 billion to 5.7 billion. But we can see that their total costs and expenses grew a lot as well, from 4 billion to 6.3 billion dollars, which is a growth of about 57%. So obviously that is something that I liked way more from Lyft than Uber. Obviously I understand that Uber has way more businesses and all that, but still is something to take into consideration, because most of their growth on their costs came mainly from their cost of revenue, exclusive of the depreciation and amortization shown separately below, from 1.4 to 3.1 billion dollars. Something nice is that their sales and marketing went from 1 billion to 1.2 billion, so it did not grow that much, but certainly their cost of revenue grew a lot, from 1.4 to 3.1, in comparison to Lyft, that we can see here that their cost of revenue grew, but not as much, from 1.4 billion to 1.6 billion, while their revenue grew way more. So you guys know that I have a position in Lyft, which I've been investing for 2 years already, and you guys know that I like to invest in stocks from 3 to 5 years, but I started investing on February 20 of 2020 when the stock was a little bit high, in my opinion. It was at 40 something dollars per share, but at the moment we did not have any problem with pandemic or anything like that. So at the moment I have a nice average price of $27.95 per share, because even though I started buying at 40 something dollars per share, I added a lot when it crashed because of the pandemic, meaning that I'm currently up 44.90%, as I have an average cost of $27.95 dollars per share. It represents 4% of my portfolio, but I was at its peak, I was up about 80%. I did not sell anything. I do have to say that I've been thinking about liquidating this position. Nothing wrong with it. I like their numbers. I see the nice growth from 3.5 of 70% in year over year. And I don't think I will completely liquidate it. Maybe sell half and then invest that half that I will sell in other things, but keep half of my position. I like this company. I believe it has a lot of potential. I decided to invest in Lyft instead of Uber, mainly because of the potential that it had. When I started investing, Uber was already in over 80 countries. I already had many businesses, while Lyft only had the riders business, and it was only in the US and Canada. So I believe they had way more potential than Uber, even though I believe that Uber still has potential because the industry itself has potential. I'm not going to close my whole position, maybe sell a little bit as I'm up at the moment. I'm not going to close right now as the market is not in a condition for me to sell. But maybe when the market recovers, if we don't have a recession or anything like that, I might sell a little bit of profits, maybe in 3 months after the Fed meeting on March. So that is what I'm going to do at this moment with my position and my investment in Lyft. I do believe that both are nice investments. I prefer Lyft. I know that most people prefer Uber, but I see a lot of potential in Lyft, and I know and I like way more how Lyft maintain their costs and expenses, even though they saw a nice growth of 70%, while Uber saw a huge growth of 57% in their costs and expenses, while the revenue also grew 83%. So let me know in the comment section below, what do you think? Which companies you believe is better between Lyft and Uber, and if you invest in any of this. Thank you, and see you next time.